Welcome back. The inflation data just released by the National Bureau of Statistics shows that the composite food index rose by 13.16% compared to 12.85% in July. The all items less farm produce, or what you call core inflation, which excludes the prices of volatile agricultural produce, stood at 10% in August, down by 0.2% from the rate recorded in July. Joining me now to throw more light on this is the Chief Economist at Vertiva Capital, Mr. Michael Famariti. Good afternoon, Mr. Famariti. Thank you very much for joining us.
Pleasure as always. Lovely to be here.
Now, the inflation number came in at 11.23% in August, representing the first year-on-year rise in headline inflation following 18th consecutive disinflation in headline inflation. What does this tell us about the economy?
Well, I think the biggest thing it tells us is that we've run out of high base effects. The increase in inflation is minute. It's from 11.1% to 11.2%, but it points to something that we've been talking about for quite a while, which is that month-on-month inflation is still pretty high. And it's high because, or mainly because of resurgent food price pressure that we've seen as a result of the herdsmen situation. What has been helping us in recent months has been high base effects, but that has whittled out in August, and now we're seeing the impact on rebounding inflation, which we expect to continue for the rest of the year.
So you talked about the inflation continuing for the rest of the year. I mean, the election year comes up next year. Are we likely to still wait until after the election to probably see another taper on the inflation rate?
Yeah, so definitely for the rest of this year, we expect inflation to keep rising. So apart from what I mentioned about food prices and base effects, we expect pre-election spending to also push up inflation. And going into next year, we're still going to see some pre-election spending, and the base also isn't particularly strong. So we're still expecting inflation to rise up until the February 2019 polls. When we start getting into the second quarter of the year, then we may begin to see another pullback in inflation.
Now, considering this, what do you think will be the next move by the central bank in terms of its monetary policy?
Okay, I always like it when I get asked about what the central bank should do after inflation comes up, because the central bank should be moving with its inflation expectations and shouldn't be altering its path so close to its decision based on actual inflation, right? So it's been clear from meeting as early as, I think, May, that it has been concerned with inflation at the end of the year coming from food price pressure and pre-election spending. Amid that, the CBN itself was forecasting inflation to rise in at least September, October. Right? So this comes slightly earlier than it had anticipated. Given that and the fact that they didn't raise rates in advance of that, now that we're in September and we have seen the increase in inflation, I shouldn't expect them to increase rates, because they should have done it in May or July when they expected inflation to rise. So in a nutshell, this number is higher, what is in line with expectations, is roughly in line with what the CBN was expecting. So it should not change what the CBN has been doing and what the CBN indeed should be doing, which is hold rates at the current levels to balance out all their objectives.
Well, we'll just have to wait and see what the monetary policy will do by the time they meet. Thank you very much for your time, Mr. Michael Famariti. Well, it's countdown to the closing gong. Let's now cross over to the exchange for update. Temple is right on the trading floor. Hello, Temple. Good afternoon. Well, what is being discussed there about the inflation figures? Surprisingly, the market seemed to have shrugged off that negative sentiment there, looking good, at least as at midday when it was 1.31% up. I hope it will close with a chair today, or has it changed?
Okay, so the sentiment hasn't really changed, but we're being positive, hoping that it's not going to change. And in terms of what's been discussed around the inflation, investors, corporate and the retail now have really priced that into their investment decision lately. Because again, like our analysts have said, the base effect has been grounded on the fact that we have been seeing much of planting season and we're yet to get deeper into the harvest season. We've also seen so much of political spending, which is also reflecting in the market by way of the sell-off and exit that we've seen from some of the domestic investors, especially the HNIs now. That's the high net worth investors who are selling down to take this fund and go spend on politics. That's what we've been seeing. Tells you that investors have priced all of this in. The moment that the market has been gaining, currently it's around 0.57%, erasing some of those gains that we've seen before. And that implies that some investors have also been able to take profit as a result of their investments within the last few days. Those are speculative investors. So right now, the level of greens or positive sentiments that we've seen is on the fact that a lot of the prices are low. So much of these stocks have bottomed out in terms of price correction, and it's available now for investors to quickly take position in. And that's why we have the banking names such as Zenith Bank, which is currently doing 2%, UBA a few minutes ago doing 3.5% uptick. Access Bank is also doing 2.6%. You look at GT Bank, which is the most actively traded in the market, it's up by 6%. No more as we speak right now, accounting for 38% of the entire sales or transaction that has been carried out in the market, after some 42 to 45 million units of shares have so far been exchanged. That then brings the banking index up to 3.8% right now, and while you have industrial flat and the oil and gas sector being flat. But if you look at the consumer goods sector as well, that is also helping to keep the index higher, because you got trades about 10% in Nigerian breweries, as well as Honeywell flour, which is also helping to sustain the momentum that we're seeing at the moment. We've seen that the total volume of transaction that we've been doing today so far has crossed some 70%. The value is around between 16 and then 17%. That's what we have right now. If you know, generally we don't see any kind of decline in Dangote cement, then we should be able to close uptick today. However, that doesn't mean that the week-to-date performance of the key benchmark index will turn out positive, because if you factor in all of the losses that we've seen this week alone, that's not enough for us to be in the green side. Chimeze.
We only hope for the best. Thank you, Temple. And I guess it's time to say thank God it's Friday. And on that note, we draw the curtain on today's edition of the program. And of course, for the week, I'm Chimeze Obi Iwagu.